everybody, welcome to the podcast. Thanks for joining me. Appreciate it. Today is Wednesday, and as you can see, I had a lot of green on the screens. It actually was a little ironic that the markets went up as we saw politicians on television. So the Dow was up 83, up a lot more before that, and sold off towards the end of the day. The transport's pretty strong today. The utility average up 1.5%. And you can see financials. So financials and utilities, both along both of those areas, did very well today. NASDAQ, of course, was down. A big reason for that was Apple, which we will get to in just a minute. But as you can see, pretty much green across the board. One standout, though, as you can see, small caps and mid caps not participating. Russell down 18 basis points, mid caps up 20 basis points. So not participating, mostly a large cap phenomenon, mega cap phenomenon today in the markets. All right, before we get started, I just want to wish my mother a great happy birthday today. She is 77 years old, and happy birthday, Mom. And now I can reveal that she was the one that I bought the Amazon Kindle Fire for. Actually, I bought it on Black Friday. It was on sale, and I'm always looking for a good deal, and actually showed her how to use it, and she used it. She jumped on it pretty quickly, and started loading apps up, and I think she's addicted to it. So, but anyways, great product. I will say it's not the iPad or the iPad Mini. There's some quirky things. It's got some ads that run on it, so it's probably subsidized, which is why it's cheaper than the iPad Mini. But in general, for the money, it's still a great product. So it's a cheap alternative to the Apple, which is the word of the day today, Apple, which we'll get to in just a minute. As you can see, S&P 500 was started out up a little bit, and then we sold off and gave all the gains back, and then the president came on television and started talking. Didn't really say anything. Sounded more like the campaign speech, and yet for whatever reason, the stock market turned around and started heading up, and was pretty strong. Went up about 120, 130 points, and then of course you can see at the end of the day it kind of sold off a little bit, but it wasn't a lot of strong across the board as we talked about. Mid caps. If you look at MDY, for example, up only 21 basis points. Not a real strong day at all. Russell 2000 was actually down on the day. Now, if we go back and look at the S&P 500, or let's just take mid-caps, for example. As many of you know, I've tweeted out, I think I may have talked about on the podcast, but we bought actually down in here on mid-caps, and I was looking for something I thought could do very well. I really like mid-caps. I think that's an interesting area. Small caps sometimes have their troubles, too volatile. Large caps, of course, you don't get some of the juice when you're looking for a trade. So we went in as an aggressive trade, and this was part of our aggressive portfolio. Went in and bought mid caps one of these 2 days when it bottomed out, and we were just looking for a trade, and we got that trade. And what obviously happened over the next few days is as we went up, it kind of paused a little bit. We kept a tight stop, but this is the area right here. When it paused here last week, we sold, and we basically sold out. We locked in about a 5% profit from this point to that point. And you can see it's having trouble getting through there. Now, it may just zoom, pull back a little bit and then zoom on back up. That'd be fantastic. That would be great. But when you're buying in the middle of all this fear, and we saw this heavy volume, we saw just all those different oscillators we watched were severely oversold. And we talked about that in the previous podcast. And so now that we've had the run, those trades that we bought down here, we have unloaded. That is very short-term trading. And I think, again, for those that have followed the podcast for years, it's about breaking this up into time frames, okay? And you have different things that are investments. You have different things that are trades, very, very short term. And you have different reasons for buying all your positions and selling all your positions. This was one for me that was just a trade. Somebody asked me today, why did you specifically sell that? And I said, because I put that on as a trade. So I have to stick to my discipline that things were so oversold back here. And now, in the last few days, they got severely overbought. Now, the good news is, for those that are, bullish, we're kind of working off the overbought condition, but we're not really going down. I mean, the stock market, I think the Dow Jones was down 60 one day, and it was flat the next day, and today it was up. But underneath the surface, it's just kind of been moving sideways, and we're working off the overbought condition. But look, you have to ask yourself, after this big run that we have, if you put some trades on there, and again, if they were short-term in nature, why wouldn't you sell? Because if you think it's a 50-50, and somebody told me today, I said, in December, we got the fiscal cliff to deal with, and, it could do this, it could do that, and he said, who the heck knows, we'll say, is what he said. Who the heck knows? And I said, well, that precise statement is a 50-50 coin toss. If you say you don't know what's going to happen, you need to ask yourself, for some of your portfolio, do you want to be in the market or out of the market? So for that portion that we put on back here, that trade is now off. And again, I hope we're wrong. I hope it just blasts on through and it goes up. That'd be fantastic. But I have a feeling that it's going to pull back and continue to gyrate a little bit, especially given the fact that we still have politicians on TV talking, and the market does one thing, and then they jawbone and does something else. One day they'll come out and say something, the market goes down. The next day say something, and it goes up. And as you can see here, the S&P 500 is struggling at this 50-day moving average. It went below it here, and then it came up to it, and then we fell, and of course now we're right back to it. So the 50-day moving average is in play, and it's heading down. And what you're going to see is in the next few days, the 50 is going to cross the 100, and then of course the next thing would be potentially that the 50 crosses the 200, maybe out next month. So that's yet to be determined. The underlying strength of the market is still mediocre. We're not seeing intense selling. We're not seeing intense fear. It's just kind of, again, it's a trading type of market. And I think if you've got things that are producing income, those are okay to keep. They got volatile, about a month ago, 3 weeks ago. But right now, the move that we had, the easy money, seems like it has been made for right now. So you take those trades off and you wait, or you keep some stops. Now that's the trading portion, but the medium term stuff, or the things that are more investment wise. I still think you're okay keeping those. Just you need to keep it to a level that you can sleep at night. So that's kind of where the market is right now. We had the bounce, and we did comment on Twitter, which if you want to follow Twitter throughout the day, it's twitter.com/Karl Eggers. Talked about taking profits on some mid caps, taking profits on biotech, just selling some things. Again, for more of the trading portfolio or the trading side of things, because it just made sense. And now you see we're just kind of gyrating. So we're kind of caught between the 50 and 200, and frankly, a little pullback to the 200 and then a rally up would be very bullish. So that's the overall market today. All right, so here is Apple, and as you know, it was the big topic of the day. Apple was down $37, 6.4%. Just a really nasty day overall for Apple, and there's a lot of things that contributed to it. I think it initially started out that there was some question about them losing market share, and some of their products that are coming out are going to they're slipping. They're still the leader, but they're slipping as far as their dominance. And some things could be delayed a little bit as far as their impact on their earnings. Remember, Apple's missed earnings the last 2 earnings seasons, so the pressure's on them now to beat the estimates. And if they can beat the estimates, then we're right back where we started and the thing takes off again. It's not an expensive stock, but you may be seeing, it's really interesting, you may be seeing, some people are saying this is a value stock now because it's a cheap stock. And look, it's $538. Look at how much profits they have per share. Don't let the 538 fool you. It's not an expensive stock, but let's not forget that you can still have what's called multiple compression, which is basically saying, hey, there's a set number of earnings, and even though those profits or earnings are going up, people aren't willing to pay as much for that dollar of earnings, and so you get this compression. So instead of it being a 14 PE, it goes to a 12 PE. Well, that'd be a 15% drop in the stock. So the stock can drop. It's not that. You just have to evaluate it and say, is it a trading stock? Is it an investment? I own a small piece of this, and I look, I don't like seeing it down today, but this doesn't concern me right now. I want to see what their fundamental business is doing. Most of the selling today was also because some of the different places raised margin requirements. So to buy Apple on margin, you have to have a little more skin in the game or more money in your account. And a lot of people own Apple on margin. So because of that, those people were forced to sell, and that caused some of it. Then you had what's called the death cross, the 50-day moving average, crossing the 200 or close to it there, depending on if you're using exponential or simple moving averages, but very close to it. That's usually a bearish sign. So you had all of that. You had heavy volume today. I think if you're looking at this now, what you want to see is obviously it hold these levels, preferably this level, but somewhere in this another couple percent down. But some of the oscillators that we watch, are they going to be higher than they were back at this old low? That would be your buy sign. But getting back to is it a growth stock or a value stock? It may be a value stock right now. It may be a cheap company, and if it transformed from a growth company to a value company, it would be the fastest transformation in history. Because most companies, when they're in growth phase, the PE ratios are 30, 40, 50 times earnings, and then when stuff slows down and their profits slow down, the stock gets crushed and it turns into a value stock. But it happens over time. With Apple, it was never an expensive stock to begin with. It was just kind of this euphoric, cult stock, but it wasn't expensive. But if it goes from growth to value, it would be a very fast transformation, and it could be. So I still think there's a good chance they could do something by year end with all their cash. They could double their dividend yield. They could buy back a lot of shares, and that would certainly boost the stock. But today was certainly a nasty day, and we'll just have to see how it plays out. But if you're trading it, this was just kind of like the market where we had the oversold bounce. We actually bought some this reversal day for our clients who didn't have it. But what happened is, as this was running up, you could see it started to turn a little bit here, and obviously at the 200-day moving average, it stalled out. So if you're trading it, it wasn't. I mean, the fact that it's falling isn't a shocker. The fact that it's fallen this much maybe is, but the fact that it's falling isn't a shocker. Again, you have to decide: are you wanting to trade Apple, or are you wanting to keep it? I think, though, people need to realize, and I see people every day that have a tremendous amount of this as a percentage of their portfolio. And that's a problem because, there's not one stock out there that you should have, 10, 20, 30% of your portfolio in. And I see it every day because it made people so much money and it was so easy and it just kept going up. But that's not the case now. And so you have to keep these things in proportion. So, the fact that I own a small piece of it, I can sleep at night even though it went down 6% because it's not going to change. It's not going to make a huge impact on the portfolio. In fact, you start looking at levels where you say, I have the powder dry to go buy more of it. So that's something we need to look at. But that was the big mover of the day, was Apple today. And obviously that's why the NASDAQ was down 23 points. A big contributor to the NASDAQ was Apple. I think probably half. I think three of the S&P 500 points, or maybe more, or maybe 4 points, were due to the Apple. So in other words, the S&P finished up 2 on the day, may have finished up 7 on the day had it not been for Apple, even 8 points. So it has that big impact still. And there will continue to be rebalancing in the indexes and so forth. But it's going to be up to Apple now to prove the critics wrong who do think that fundamentally something's changed. Things have changed. Apple is not, I don't think they're as fundamentally strong as they were 6 months ago. The question is, compared to 6 months ago, are you getting a better deal now, taking into consideration that news? Remember, that news is out. So either they disappoint and it goes down further, or the stock is undervalued and they come out and they have a great Christmas season and they blow earnings away and the stock, jumps up well over, $600 again. And that's certainly a possibility. So I wouldn't panic too much if you own Apple. If you bought it at $710, maybe you should be panicking, or $700. But look, if you've owned it for a while, there's still very good things going on with this company. And you have to look at them in isolation and say, compared to other companies, where's my capital going to go? And Apple still deserves our capital as far as I'm concerned. All right, I'm going to keep this short today. Have to have an appointment to run to. But thanks for joining me. Appreciate it. And don't forget twitter.com/Karl Eggers, eggerscapital.com, Facebook, Google+, and you can get a free subscription on karleggers.com. Take care, everybody.